Lucky 7, Wow Ulam, Argentina, Birch Tree, Angel Liva. Did you know that these products are manufactured by one company? Yes, these products are manufactured by Century Pacific Food Incorporated. Good afternoon, ladies and gentlemen. Century Pacific Food Incorporated is a Philippine food processing company primarily engaged in the manufacturing, marketing, and distribution of processed marine, meat, milk, and coconut products with a core purpose to nourish and delight everyone, every day, everywhere. CPFI is the largest producer of canned food in the Philippines and is also among the Philippines' largest exporters of private label or original equipment manufacturer (EOF) tuna and coconut products. The company's vision is being a sustainable and responsible global company of entrepreneurs that nourishes and delights customers with healthier food and beverages through manufacturing excellence, nutrition expertise, trusted brands, and passionate people.
It is the company's mission to reinforce current businesses and brands, strengthen the organization, pioneer the development of healthier and tastier food and beverages, and scale up the business across the globe. CPFI is driven by its core values of respect for the individual, teamwork, passion for excellence, customer-centric, humility, integrity, malasakit, and entrepreneurial spirit. CPFI offers products addressing a broad customer base, from value for money to affordable premium. Presented in the screen are the company's products, which are available in various trade channels, including groceries, sari-sari stores, and e-commerce.
As presented in the company's 2022-2021 Comparative Consolidated Statement of Financial Position, the company's current asset had a 19.5% increase amounting to 5.1 billion with the inventories accounts. 3.6 billion increase as its major contributor, which is 70% of the total increase. The non-current assets of the company also increased by 15.9% in the amounting of 2.2 billion and is primarily contributed by 1.6 billion increase of the goodwill and intangible assets account. The total assets of the company increased by 18.2% or 7.4 billion pesos.
On the other hand, CPFI's current liabilities had two decreasing accounts, while the rest of the accounts increased, resulting to a 20.5% increase of the total current liabilities, which is 2.5 billion, in which 1.8 billion is from the short-term loans payable account, the major contributor of the said increase. The total non-current liabilities also had 28.2% increase, amounting to 1.03 billion despite of one decreasing account and with borrowings as the major contributor. The total liabilities of CPFI increased by 22.2%, amounting to 3.5 billion pesos. Meanwhile, CPFI's equity account also increased by 3.8 billion pesos, 15.6%, despite the increase in the unappropriated retained earnings account. The major contributor of the increase is the appropriated retained earnings at 5.7 billion. This resulted to the 18.2% increase of the total liabilities and equity amounting to 7.4 billion pesos.
Moving on to the financial ratio analysis of the company, CPFI's current ratio for 2022 is 2.13, which means that for every 1 peso of debt, the company allocates 2.13 pesos for payment. The quick ratio is 0.75 since the current asset increased by 19.5% while the current liability increased by 20.5%. The difference resulted to an inverse effect on the company's liquidity ratios, which decreased by 0.02 and 0.04. Considering the fact that the current ratio is relatively high, whereas the quick ratio is relatively low, this leads the company to a moderately liquid position, which further implies necessity for improvements. As for solvency ratios, The debt to equity ratio increased by 0.04, debt to asset increased by 0.01, and equity to asset decreased by 0.01. As presented in the screen, the ratio shows that CPFI's source of financing is equity, which is a conservative capital structure as the company aims to manage capital to increase the value of shareholders' investment and maintain high growth. This further implies that the company is not overly leveraged. Hence, Century Pacific Incorporated is solvent.
Based on the balance sheet analysis, Century Pacific Food Incorporated has a moderate liquidity position and a favorable solvency position. However, even though the company has achieved its goal to maintain a current ratio of at least 1:1 and debt to equity ratio not exceeding 2.5:1, the company may need to improve its liquidity by increasing its cash flow or reducing its inventories. The company may also need to reduce its debt by increasing its equity or decreasing its liabilities. The company has a strong asset base. The company may be able to generate more profits and dividends for its shareholders in the future. With this conclusion, it can be recommended that to improve quick ratio, CPFI could take action in terms of inventory management, working capital optimization, and cash flow management. Moreover, since the company's equity asset ratio decreased this year to operate with alignment to its capital management goals, the company could try to increase its asset turnover. Alternatively, the company could try to increase its profit margin, reduce its debt, and make strategic investments.